Ton of breaking news this morning. And at the very end, we have the economic news that absolutely just broke a few minutes ago, which is roiling markets. Although, as you'll see, it's kind of confusing. It goes both ways. So let's get right into it. Let's begin with the big breaking news on Tesla, and that is from CNBC this morning. Elon Musk claims he can grow Tesla into a leader in AI and robotics, an ambition that he said will require a lot of pricey processors from NVIDIA to build up the Tesla infrastructure. On Tesla's first quarter earnings call in April, Musk said that the electric vehicle company will increase the number of active H100s, NVIDIA's flagship artificial intelligence chip, from 38,000 to 85,000 by the end of this year. He also wrote in a post on X a few days later that Tesla would spend $10 billion this year in combined training and inference AI. But emails written by NVIDIA senior staff and widely shared inside the company suggest that Musk presented an exaggerated picture of Tesla's procurement to shareholders. Correspondence from NVIDIA staffers also indicate that Musk diverted a sizable shipment of AI processors that had been reserved for Tesla to his social media company X, formerly known as Twitter. So I think there's some confusion there. Let's start there. I'm not sure that there was an exaggerated amount, and I think that probably it was X.AI that's getting those chips, but let's take a look. Shares slipped as much as 1% on the news and pre-market trading. That is sort of true. They had been up and then they came down, but not necessarily because of that news. But there was a slip in the pre-market about the time that the news came out. By ordering NVIDIA to let privately held X jump the line ahead of Tesla, Musk pushed back the automaker's receipt of more than 500 million in graphics processing units, or GPUs, by months. By months. By months. Let's get it straight here. Likely adding to delays in setting up supercomputers Tesla says it needs to develop autonomous vehicles and humanoid robots. Elon prioritized X100 GPU cluster deployment at X versus Tesla by redirecting 12K of shipped H100 GPUs originally slated for Tesla to X instead. In a video memo from December said, in exchange, original X orders of 12,000 H100 slated for January and June were redirected to Tesla. A more recent NVIDIA email from late April said Musk's comment on the first quarter Tesla call conflicts with our bookings, and that his April post on X about $10 billion in AI spending also conflicts with bookings and FY 2020 and full year 2025 forecasts. The email referenced news about Tesla's ongoing drastic layoffs and warned that the headcount reductions could cause further delays with the H100 project at Tesla's Texas Gigafactory. Okay, first of all, the $10 billion doesn't all go to NVIDIA. It's been very, very clear that a lot of that $10 billion is going to various other companies. Dell, Oracle, and others are getting some of that money. So this is, again, a senior official. This is not a Tesla statement. This is people speculating and trying to guess and making statements that they don't know probably what they're talking about. The new information from the emails read by CNBC highlights an escalating conflict between Musk and some agitated Tesla shareholders who question whether the billionaire CEO is fulfilling his obligation to Tesla while also running a collection of other companies that require his attention, resources, and they require his attention, his resources, and a hefty amount of capital. A spokesman for NVIDIA declined to comment for the story. Musk and representative for X and Tesla did not respond. Also, critics have said Musk is only a part-time CEO, the company responsible for the vast majority of his wealth. Musk is also the CEO of aerospace company SpaceX, the founder of brain-computer interface startup Neuralink, and the tunneling venture The Boring Company. He also owns X, which he acquired for $44 billion and was still called Twitter, and he launched his AI startup X.AI in 2023. X and XAI are tightly intertwined. In a post on X in November, Musk wrote, X Corp investors will own 25% of XAI. Additionally, XAI uses some capacity in X data centers to run some of its training and inference for the large language models. Musk also pitched Grok, originally named Truth GTP, as a politically incorrect chat box with a rebellious streak and a would-be competitor to OpenAI's ChatGPT and other generative services. While Musk juggles as many ventures, Tesla shareholders have reason for concern. The company is in the midst of a troubling sales decline due in part to aging lineup of electric vehicles and increased competition. Its reputation has also suffered in the U.S., according to the Axios Harris Poll 100 survey, which attributed some of the slippage to Musk's antics and political rants. Okay, first of all, yes, Tesla's sales are slightly down from last year. The Trump antics in the U.S. are not causing the slippage in, say, China. It's not causing BYD sales to go down dramatically last fall or winter, early winter in China. It's not causing, all of a sudden, some of these sales are picking back up again, as we'll see in a minute. Anyway, let's also talk about Elon said that Tesla was no longer compute constrained. He said this about 60 days ago. So in other words, at the end of March, sometime in March, April, Tesla was no longer compute constrained. So that means that Elon would have been able to know that his allocation between the two companies was not going to affect the fact that Tesla was going to become unconstrained in terms of compute in early spring. Many they may have not had the ability to even take delivery at that time and put them to use. This would also be something only Elon Musk is going to know. And the allocation shift was minor, a couple of months, as stated in the story. So this looks like a bunch of FUD to me. It looks like CNBC and others probably that are sharing gossip and sharing stuff. They don't know what they're talking about. All of this is from internal emails by people speculating at NVIDIA. Hopefully, maybe somebody named Jensen Huang will find the perps who allowed this even to get out and potentially do some firing, because this is not a good thing to do to your customer. Anyway, I'm sure this will be unfolding as the day goes by, and Nicholas Gibbs and I can take a deeper look at it. Nicholas has already been commenting on X that he thinks this is a real bunch of hooey. Jeff Lutz has already commented on X that he thinks it's ridiculous. So anyway, it will play out over probably the next 24 hours, and we'll see again if Tesla was in fact no longer compute constrained in March or early April, then the rest of this is of zero consequence. Do you agree with that? Well, let me know in the comments below. All right. From investors.com, Tesla vehicle insurance registrations in China last week jumped sequentially and increased versus a year earlier as China EV registrations broadly picked up steam at the end of May. Tesla shares were slightly higher early Tuesday with that news, and then as mentioned, they went down with the other FUD that came out. Tesla insurance registrations in China totaled 15,200 for the week of May 27 to June 2, up 16% from the previous week, according to data that was put out. Vehicle registrations tend to pick up towards the end of the month. Tesla also has stepped up incentives in China in recent weeks, including the zero interest offers. Yeah, that's been going on for longer than just a few weeks. Through 9 weeks in Q2, Tesla China insurance registrations are up about 18% compared to the seasonally slow first quarter, and down 4% versus the same time frame in 2023. Meanwhile, Tesla China deliveries in May, the total China deliveries in May came to 72,573, down 6.6% versus a year earlier and up 16.67% versus April. So total deliveries, total shipments to export as well as domestic, 72,573. You may remember I've talked all along that China is pretty much maxed out. So it's not something that you're going to see, but 72,000, if you multiply 72 times 12, you get 860,000. So that is definitely on, par with what Tesla has been doing out of Giga Shanghai. Yes, it's probably got a capability of going to 1 million run rate, maybe even 1,000,001 run rate. So it's under that run rate, but not dramatically. Through the end of May in 2024, Tesla China deliveries are down 7.1% for the entire period. Most of Tesla's China rivals, including BYD, NIO, Li, etc., have reported solid year-over-year gains so far in 2024. Meanwhile, Reuters reported in late May that Tesla planned to reduce Model Y production in China by around 20% between March and June. That would therefore be unlikely because that would they wouldn't be able to reduce the Model Y shipments by 20% and still hit these numbers. Analysts predict global Q2 Tesla deliveries will be about 445,000 vehicles, according to analyst consensus. That would be down 4.5 compared to last year's 466. My projection from the weekend, I believe, was 470. Tesla hit a record 484 deliveries in Q4. Tesla reported in early April that global first quarter deliveries totaled 386,000, while it produced 433,000. So that's the big difference that I see spinning out into Q2 and causing a bigger increase than the street is expecting. All right, now we have Barron's showing that the street is starting to maybe get the picture of the future of Tesla. Tesla CEO Elon Musk believes self-driving technology will change the world of personal transportations and the fortunes of his electric vehicle firm forever. Now, he just has to get the cars to actually do the driving. I think achieving full self-driving might be the biggest asset value appreciation in history. You've heard this said before many, many times. Musk said in Tesla's first quarter earnings report, instead of parking in a commuter lot, the cars will be out 5 times as much, driving around. I'm paraphrasing here. Musk has been all in on self-driving cars for years. His confidence that Tesla will achieve truly autonomous driving appears to be growing. Tesla is hosting a robotaxi event, we know, on 8/8 to showcase this technology. Musk also recently traveled to China, winning the right to sell Tesla's highest level driver assistant features to Chinese customers. Yeah, that's not quite right, Barron's. They almost have. I don't think we have the final signature on the final piece of document allowing Tesla to do that. Morgan Stanley analyst Adam Jonas pointed out in a recent report that artificial intelligence computing can improve self-driving technology at an accelerating rate. He values Tesla software and robotaxi business at roughly $161 in a share, more than the $67 a share he values the car business. Jonas also has a per share value of Tesla's stationary power and other businesses. Jonas is a Tesla bull with a buy rating of 310 price target. Guggenheim analyst Ronald Jusicow is a bear, rating Tesla's stock a sell with a 126 price target. Yet he agrees with Jonas that Tesla stock is changing into a bet on self-driving cars. Tesla is increasingly an investment underpinned by autonomy, wrote Jusicow. No, I think they spelled it wrong here. That's a challenging balancing act requiring investors to buy into a vision of the future with limited supporting evidence while simultaneously ignoring the current light vehicle business deterioration. Limited supporting evidence. His deterioration refers to falling sales. Tesla delivered, we just went through all of that. Amid falling sales, the prospects for self-driving cars loom larger. Lowered sales will not be a continued issue, as all of us agree. They will be back on track at some level. We don't know at what level, but they will be increasing sales probably year over year and certainly in 2025. We don't have a lot of confidence in steady state market structure or the timing for the robotaxis. Tesla could be 5 years away or even 10 years, but a 5-year delay could cut today's value of the robotaxi business in half. I would agree with that. If Tesla doesn't come out, if it's another 5 years before robotaxis or robocabs happen, it will lower the overall value of the enterprise because there will be other competitors by then. Sawyer Merritt says Nissan has begun demonstrations of a prototype Nissan Leaf equipped with autonomous driving technology. The company aims to launch by 2027. This prototype has 14 cameras, 10 radars, and 6 LiDAR sensors. It doesn't go on to say, but should go on to say, and would cost the consumer $700 million. Okay. Okay, this is Randy Kirk. I know that was a very long amount of Tesla news this morning. Please hit the like and subscribe and notify button. We got Brian White coming up later today. And then go down below, hit that Patreon link and go over. Thank you very much. We had yet another person join on Patreon yesterday. We've got a streak going. Help the streak keep going today. Become a Patreon member. That'd be fantastic. $3 is the nothing burger level, but I'd love to have you on at $3. $5, another $2 get you a free audiobook, and $10 gets you 2 free audiobooks, or you get your Cybertruck bottle opener. All right. Futurism says this morning, this is a good one. Futurism says the supply, listen to this amazing article. The supply of renewable energy is soaring across Europe to the point where the cost of electricity is dropping to zero and in some cases going negative. On the one hand, there's a boon for plenty of consumers, not to mention the environment. But businesses are now starting to worry that the upside down economics could cause the demand for bigger and bigger renewable power projects to taper off, Bloomberg reports. So Tony Sieb has been talking about zero cost of energy, negative cost of energy for a long time. It is starting to happen. Negative pricing is going to slow down the deployment of renewable capacity for most players. Solar developer Sonetics CEO Ax Keeman told the outlet. That affects your ability to invest at reasonable levels. Well, yeah, it is hard sometimes to put in solar, go out and spend a bunch of money on solar if you think that you're going to have to not get paid for it. I think it's overstated though. It will eventually be true, but right now it's overstated. It's a bizarre inversion of benefits and incentives. Negative power prices occur when high power generation coincides with low demand, something that tends to happen most often on public holidays. As a result, because on public holidays, nobody's at home, right? As a result, renewable energy providers offer up electricity during those periods for negative prices. In short, they're essentially paying buyers to take on the excess power. In reality, though, taxes and transport costs usually mean consumers still have to pay, but maybe it's a penny a kilowatt hour or something. Negative prices first occurred in Germany in 2008 and initially remained rare, but according to EU market monitor Acer, those instances rose 12-fold, an explosion in 2023 compared to the previous year. And so far, 2024 has continued the trend. In May, an unusually high number of sunny days saw power prices in Denmark plunging below zero for a record amount of time. In Germany, solar producers have been struggling with negative prices, throwing the energy market into chaos. In California, which gets a quarter of its electricity from solar, prices went negative during one day in April, indicating that plenty of energy is being wasted. Add it all up, and it highlights the growing need for what? For energy storage batteries that can redistribute power when the demand is high and supply is low. A galling grid problem that spurred a host of exotic potential solutions. But the main solution is batteries. Investors are also growing wary of dropping revenues, which can ironically disincentivize them from investing in new renewable power sources. No, it will mean that they know they need to have batteries. In April, Spain's energy minister Teresa Ribera warned that negative power prices in the country could slow down investments. Experts predict the trend of increased negative energy prices could continue for another decade or so. For now, get used to the strange new world. No, it's going to continue. The price of energy is going to come down for the rest of this decade, and there will be times, and there will be times in the future when it will be negative because these energy suppliers will realize that there's a benefit to superpower. And again, Tony Sieb has gone into that in detail. We've talked about it on this channel before. From Adam Taggart, who goes under the handle on X of Menlo Bear, Q2 U.S. GDP growth estimate has plunged, according to the Atlanta Fed's GDP Now forecast. 2 weeks ago, it was 3.6. It is now in half at 1.8. Now you also have that decrease the other day in the GDP that went the actual reading of the GDP from the first quarter dropping from 1.8, I think, to 1.3. Or no, maybe it was 1. Yeah, I think it was 1.8 to 1.3. Anyway, GDP falling. I'm, of course, predicting that we will be in negative territory in the third quarter. All right, two breaking stories here. CNN, the number of job openings in the U.S. shrank for the second month in a row, setting a 3-year low amid further signals of cooling. There were 8 million available jobs posted in April, according to the Bureau of Labor Statistics. The JOLTS report released it. That's slightly below the downwardly revised 8.36 million seen a month before. Doesn't tell what that number was. I think it was about 8.6. So they dropped last month's number in terms of the job openings, and now they've got a big drop this month. Speculation. Who would I be to speculate that this 8 million number will also be revised downward? Economists were expecting job openings to stay at 8.36, but what they got instead was a drop in last month's as well as this month's numbers. So, but in case you're not already confused about the direction of the economy, I mean, this would be good news for the Fed. This is a big number they would be looking for. So this would encourage, this should be causing the bond market to go up. In other words, for rates to come down. This would be encouraging the idea that we might get those Fed rate cuts maybe in July after all, or September. I talked about this yesterday that I don't think we're definitely not going to have them in September unless they start in July. And I still don't believe they'll happen in July, but we'll see what happens tomorrow and Friday when the job numbers come out. New orders from, but okay, so if it sounds like the economy is cooling, and many people now believe me, that I've been saying for weeks now that the economy is cooling and there's a good chance we go negative in third quarter. If that sounds like the direction that you think things are going, how about this? This is from the Census Bureau this morning. New orders for manufacturers goods in April, up 3 consecutive months, increased 4.3 billion or 0.7%. That's a good increase to 588 billion, the U.S. Census Bureau reported. This follows a 0.7% March increase. Shipments also up 3 consecutive months. The following 4.4% March increase. Oh, I'm sorry. Okay, so unfilled orders up 45 consecutive months, increased 2.8 billion. Unfilled orders up 45 consecutive months, even as manufacturing has been horrible. That one confused the heck out of me this morning. This follows a 0.3% March increase. The unfilled orders to shipments ratio was 7.1, which is down. These things are not adding up. Inventories up 4 of the last 5 months, increased again. And so inventories are up, but unfilled orders are up. So even though inventories are up, unfilled orders are up. Do you follow me? This is just absolute nuts. Anyway, the inventories to shipments ratio, anyway, was down in March. All right. So what have the markets done with this? So last time I checked, well, let's not even talk about last time I checked. Let's just go ahead and look at what's going on. So the Dow, which has been up pretty much all morning, actually in the pre-market, it was down. It is now up 59. So it's liking the fact that the market, that maybe there's some cooling going on. So it's up $61 right now. The NASDAQ, which was, I think, up in the early going, maybe not up, maybe, yeah. Anyway, is down 40 at this point. S&P is down 895, 8.95, 9.35 just changed. Tesla, which was up a little bit in the pre-market, like 78 cents, and then down in the pre-market about the same, about 50, 60 cents, and then was down as much as $2 after the market opened, is now down only $1. All right. The rest of the Magnificent Seven are all down, including NVIDIA, but by very small amounts, $1, 70 cents, etc. And the Cathie Woods are totally mixed, and also mixed with, except for CRISPR, which has been on a tear. It is, like 3 cents, 8 cents, 5 cents. So activity, I would call the activity right now sideways. I think people are now very confused by the numbers. The numbers are, for over the last 2 days, have been all over the place. Some showing business doing well, some showing business not doing well, some showing inflation coming back. Meanwhile, Truflation, which I think I can barely believe anymore, even though their information should be totally up to date, is showing dropping inflation all the way down to 2.19 now. And showed a dramatic drop on the first, which again, apparently they rejigger their numbers every first of the month. And so they showed like a big, huge drop on the first. So I'm not sure that's helpful. Tesla continues to move higher, heading toward the green, only down 58 cents now. Let's go ahead and take a look at the bonds. We have got the bonds. The 10-year is down let me say it again. The 10-year is down 4.7 basis points at 4.355 after being down about almost 10 yesterday. We've got the 2-year, which was also down strongly yesterday, but only down 3.5 basis points this morning, giving us over 40 basis points, 42 basis points difference now. So that's widening the inversion. And the 2-month is only down 0.4%, 0.4% of a basis point, not percent. Yeah, 0.4 basis points. That's what I wanted to say. And now it's over 100 basis points in that inversion again. I don't know what it means. Nobody seems to know what it means, but I don't think it's good. Nobody thinks it's good. That's the biggest it's been in months, and you've got the 2-year also widening. All right, let's go to oil. Oil this morning is down another 95 cents at 73.24. A lot of the chatter this morning is that nobody believes that the OPEC nations will hold to their numbers. There's a speculation that there's even clauses in the agreement that they made over the weekend that would allow some of the member states to increase their output later. So that speculation is that there's going to be an oversupply in the fall, maybe also taking into consideration the U.S. economy maybe not being that strong. So we've got oil down to 73.21. That's the lowest it's been in a while. Brent at 77.35, about a $4 difference, which continues to suggest concern over the Middle East things that are going on. Natural gas down 2.18% after being up strongly the last couple of sessions. We've got gold down $29 at $2,340. That's a big move down. Silver also down 3.52%. Copper down 2.38% at 455. You've got the dollar. I checked on the dollar this morning. So the dollar has been falling and overall, so a little bit at a time, to where it's kind of at a season of, not what do I call it, near-term low, and most people are thinking that it's bottoming out at this point. However, if these bond yields continue to drop, the dollar will probably also drop. You've got the Bitcoin this morning up 456 at 69,552, pressing against 70 again. And that is all of that. Let's go back though and take a look, because that market was moving a lot. Yeah, so you've now got the Dow continuing up higher, 85 now. NASDAQ moving towards the green, S&P moving towards the green, Tesla moving, everything is moving toward the green. Magnificent Seven, two, 3. It's definitely looking like everything's moving toward the green. So the fight, as you know, is, do we want the economy to go down a little, just enough? Do we want inflation to go down just enough to where the Fed has to act or can act in July, which is probably the most likely, 51, 53%, I don't know, somewhere around there, of those that are being polled think it will, that the Fed will move in July. If they move in July, they could easily then move in July, September, November. That would be the market would love that. Of course, the Fed doesn't want to do that too soon, and I still believe it will not happen. As of this moment, I still believe the Fed is not going to move at all, and if they do, the earliest November. That's still my call. I'm still 30% saying recession. Now remember, recession requires 2 quarters in a row of negative growth. Right now, I think there's more than a 30% chance that the third quarter will be a negative growth quarter, but I don't know. I can't make a decision about the fourth quarter yet in order to really call to make my call for the recession more than 50%. All right, so that's where the markets are now. One last time for fun. No, okay, Tesla still sitting around 50 cents off. Okay, so remember, we want you to go back and take a look at my video with Brian White yesterday. It was a very fun and interesting, useful video in terms of the capacity for production at all of the various Tesla factories. I'll put the card up for that one once again right here. And then Brian White will be back this morning. And what are we talking about this morning? I kind of forgot. I actually can't remember. Anyway, I'm sure it was phenomenal because, of course, Brian is fun to have on the channel. So take a look anyway, and I will remind you later today if you didn't check it out. We got Nicholas Gibbs on tonight. Be sure to come around for that. And now, If you're still with me, this is the perfect time. See, the video is over. This is the great time to go down and keep the streak going. It's been about one a day for the last week of people joining Patreon. Be one of those to join Patreon today. I'll appreciate it. You can't imagine how much I'll appreciate it. All right, thanks. And it's been great talking to you.